Welcome back. We are joined today by Sean Fu, a market analyst and China expert, to discuss the recent developments in the US-China economic war. So, welcome back to the program.
Hey, great to be here, Glenn, as always.
Well, we see that the US pressures both allies and opponents, but while the Europeans are hoping that unwavering obedience and subordination will be rewarded by Washington, it hasn't yet. But we then see that China, and I guess now you can put India in that category as well, have chosen to push back instead. And I was wondering how we see this play out, especially in the chip market, because this seems to be a very important area as there is a, let's call it a competition for technological leadership in the chip sector. So NVIDIA, this leading American chip maker and AI computing company, they obviously have been banning sales. Well, they've been forced to ban sales of advanced computer chips. But now we see that it's flipping a bit, that China might itself start to close off its markets to the American chip makers. Now, I'm not sure if it's because they're not reliable partners or just in the tech competition to strip them of this market share. What is actually happening here? Because this is something that you're paying close attention to.
Sure. I think China's beginning to realize the big advantage they truly hold when it comes to this economic war, when it comes to the trade war, when it comes to all the tariffs. And it's not going to be just a struggle for this next 3 to 4 years. It's going to be a struggle for the next 20 to 30 years. So there's a reason why NVIDIA at the start petitioned so hard to the Trump administration and before that the Biden administration to try to sell chips to China. Because NVIDIA kind of knows what the future of the world is going to be. It comes to tangible goods, it comes to tangible manufacturing. And China's semiconductor market is way more than the 50 billion that Jensen Huang just told the world about it, right? That's just a figure. But if we extrapolate it to the future, we can see that China, a lot of their factories are entering, the Internet of Technology, IoT, robotics, and all this requires a lot of hardware, a lot of AI chips, a lot of data centers, a lot of AI accelerators. So it kind of makes sense for NVIDIA to try their best to sell into it. And it's quite amazing that the Trump administration doesn't even understand the consequence of it. And that's why he started to tax NVIDIA 15% of the top line revenue of Chinese money coming in buying all these chips. Now, China is smart in a way that they realize this is the big advantage they hold apart from rare earths. They have this big, gigantic consumer market where the chips will be used very effectively, very efficiently. So the Chinese market, especially when the chips, the demand is quite self-sustaining for their own local companies like Huawei, Capricorn, their own local chip manufacturers. However, if they allow Nvidia to penetrate into the markets quite easily, they do stand the chance, the risk that a lot of their local companies in their bid to outcompete each other, whether that be Tencent, whether that be Alibaba, they might actually run towards Western chips for this initial advantage. Because I think we all know that competition in China is very furious, one of the most harshest place on earth to actually do business. And if that's the case, I think Beijing is really worried about losing the momentum and all this money being funneled to Nvidia and them accelerating their chip progress. Because back to your earlier comment about the US actually squeezing their allies for advantages, this is something that we need to understand a bit more. Now, the US wants to squeeze, I think, a total of 800 billion to $1 trillion from three of their allies combined, right? We're talking about Korea, we're talking about Japan, and we're talking about EU, Europe. Now, a lot of this money, yeah, they have been pledged, they have not been officially signed into effect, but the ambitions of this, how do I say, global shakedown is to funnel the money towards US technology, US manufacturing, and to build up their chip infrastructure. So the US is playing their hands, they're squeezing their allies to shift all the manufacturing capabilities, especially when it comes to semiconductors, back to the US. China, on the other hand, wants to focus all their capabilities, their market access to their own local companies. So we are now seeing an iron wall and iron curtain when it comes to uh, the global market of AI chips. China on one side, the US obviously on the other.
Well, how will this affect the future competitiveness though? Because you do need, I mean, the scaling is quite important, isn't it? If you don't have a large market to sell to, this is, where you get the money to finance the research and development, and it's again the developments of the chips which is imperative in this race. But also, why is it that the Chinese seem to be making more money in AI as opposed to many companies in the US has been, well, struggling to actually make a profit there, though?
Right, I think it all comes down to economics, right? Basic supply and demand and the cost of labor. China has all the supply chains in the world. They've developed it over the last 20, 30, 40 years. And the US doesn't really have that capabilities. Now, what the US does have is the ability, to tariff the world, which is basically squeezing their own people for money. I think the tariff revenue is anywhere from, I guess, it's 70 to $80 billion in August. I think that was the recent number given by Scott Bessent, the secretary. And because of that, I think the US will be able to keep, you know, their AI technology, the race up to a certain extent. But you're right when it comes to margins, it's not very sustainable. And that's why we are beginning to see a lot of US firms, AI technology firms, OpenAI, I think it's Microsoft as well, running all the way to Britain. It just went to the UK and they're promising or pledging to build up data centers over there as well. So we can actually see a future where the US will try to ring fence their supply and demand for chips within the entire G7 and their markets, right? We could even come to a situation where the US could say, all right, you want to sell into our markets indefinitely at a very low tariff of 10 to 20% or whatever. We'll require you to buy uh, XYZ billions of chips every single year. And with all the infrastructure set up by OpenAI, Microsoft, within, uh, for example, UK itself, you're going to be highly dependent on American chips, right? It doesn't matter if the chips eventually come out from Intel, whether the chips eventually come out from NVIDIA, that's besides the point. But it's all going to be built under the American infrastructure, the American tech stack, the American architecture. So I think this is what the US is going to do as well. They're going to squeeze their allies for um, demand for all these semiconductors. But China, on the other hand, is more weirdly free market in a sense, right? Considering, everyone likes to say their economy is very close and contained. It's all going to be more about economics, how cheap the chips are. Whoever wants to buy them will buy them. And unfortunately, with all the missteps made by the US, as we can see, they have driven countries like India closer to BRICS, and as a consequence, closer to China, right? So chances are Chinese demand for all these semiconductors, all these technologies, it's growing. It's right now latent because Chinese chips has yet to catch up. It could be 2 to 5 years. But once they actually reach the pivotal point, the breaking point, the tipping point, then the floodgates of revenue will just begin.
Well, you mentioned the tariffs, and what is the state of the current tariff war? People often ignore or don't understand how the tariffs work, I think. And, this can be excused because sometimes seems that the Trump administration doesn't understand it either, or perhaps they just pretend not to understand it. But the whole point of tariffs is you put the tax on imports. So the companies within your country, they have to pay an extra tax on importing foreign good. The whole point is that this adds cost to imports. So you will give local companies within the United States a competitive advantage vis-a-vis the foreign companies we're seeking to export. And this is fair enough. This is why many countries pursue the tariffs. But the idea that this is, foreigners going to pay off American debts. This is very deceptive, but I keep hearing rhetoric along that line. But you would think that some consequences will begin to ramp up after a while. I mean, if all these US companies have to pay all these huge taxes now on imports, well, what is actually happening in the US market in terms of profits, the jobs, and yeah, the overall economic health?
Sure, I think the effects of the tariff war is already being felt in the US jobs market. I mean, we had basically one horrific revision come down over the last, I think, few weeks or month ago. I think the US nearly lost 1 million jobs in revision. And if we look at all the payroll data, yes, actually, it's basically we are witnessing a downtrend. We are simply witnessing a downtrend. And when it comes to manufacturing, I think for one of the months, I'm not sure whether it's June, July, or August, it actually went negative. So we're looking at an economy, the US, that has the ability to so-called endlessly borrow from the world. They are squeezing their own people for money as well, but yet they are losing jobs. They are losing manufacturing jobs, especially. And the big question is why? But the answer is actually very simple. When you raise the tariff, the effective tariff rate in the US today is anywhere from 18 to 25% along that range, but it's still very punitive. So if you go to Walmart and you used to spend $100 on your groceries or what have you, now you're paying 120. Now you're paying 125. So obviously, the rest of your budget, your rest of your discretionary spending will have to come down. And most likely, you're not going to buy a new car, you're not going to buy a new tractor, even buying a new computer is going to be hard. So a lot of these companies that, you know, their cost of labor is going up. The tariffs is also making their input costs go up, especially when it comes to steel, when it comes to aluminum, when it comes to copper, right? The tariffs there are around 20 to 30%. So their cost is going up while demand from the average American is coming down. So we are seeing a double squeeze. And at the end of the day, these companies, they can't really pass everything down to the consumer. They have to eat around 20 to 30% of tariffs themselves. And that was a study done, a survey done by Goldman Sachs itself, right? One of the US multinational banks. So as a consequence, it's quite simple to see what's happening. The US labor market is suffering. And if this continues long enough, there will be a reckoning where we will enter. I think we are already in stagflation at this point of time.
Well, the whole point, as I mentioned with the tariffs, is to give domestic industries a competitive advantage. But in the sectors where the US don't really have domestic industries to hand over competitive advantage to, how's the US handling this? For example, in key metals, which the US can't really replace, no matter if they put 10,000% tariffs. Well, what are they doing? Are they walking back these sanctions, or are they absorbing, sorry, tariffs, or are they absorbing the pain, or how is the US dealing with this? Because if there would be efforts to replace exporters, the imports, then surely they would need several years and a lot of investments to actually replace it. But even to make these investments, one would want some predictability. This
Right.
is what the investors would like, and nothing is predictable these days. It looks like tariffs are on today, they're scaled back tomorrow. I mean, how are they dealing with when there's a lack of domestic industries to pick up where they're blocking or tariffing the importers?
Right. So we have to start from the top here. This is where Trump has actually trapped the US economy, right? So on one hand, the US, they are trying to relax the measures on China. We have seen a lot of back and forth meetings with Scott Bessent when it comes. They went to London like has the house. Then the next meeting was in Spain. At the end of the day, it was trying to ensure that China will continue their supply of rare earths to the US. And that's very important, right? I think we know that it's used in defense industry. It is used in all these Pentagon linked companies. and as well as the semiconductor industry as well. But the big problem is if the US wants to really remain self-sufficient in the long term, they can't keep doing this, but they're trapped. Remember what Trump said in the beginning of the tariff war, right? The whole basis of the tariff war is to move um, companies around the world back to the United States. He even told US companies that are manufacturing overseas, like in Canada and Mexico, you need to come back to the US or we're going to tariff you to oblivion. And that also applies for all these resource mines, all these rare earth supply chains as well. It's going to be unthinkable if Trump one day comes out say, we are going to spend $100 billion to develop mines in Africa, mines in Indonesia, or mines in whatever, Russia or Central Asia, right? It's going to be unthinkable to his base. It's going to be unthinkable to Congress. It's going to be unthinkable to everyone who voted him in on the basis of restoring American jobs. But because of that, trying to develop US mines, trying to develop US supply chains is just not feasible. I think there's one element called neoprosodium or something like that. I can't really pronounce it, but I guess it's a mineral highly demanded by the Department of Defense, the DoD. So what's really interesting about it is that the DoD told this company and subsidized the company quite a bit, and they told them, all right, we are willing to buy this element from you, this supply from you at around $100 to $110 a kg or a pound or a ton. I can't really remember the quantity, but they told them we'll guarantee you a certain floor price. So even if the floor price of that mineral did drop to 60, 50, or 40, which it did, I guess, a few months ago, the US government is willing to use taxpayer money to subsidize the purchase of these rare earth minerals in order to claim that they are self-sufficient. But once again, it feeds into the idea, is this really free market economics? And who really pays for it at the end? It is the US consumer, the US taxpayer, and the US national debt.
Well, are they making some headway though by compelling some countries to shift their production to within the United States? For example, countries like South Korea, because they are on one hand, if they're slapping all these massive tariffs, which makes it less competitive to export towards the United States as opposed to setting up business within the US. But also at the same time, the US is strong arming many of its, well, especially allies these days from Taiwan, Japan, South Korea. Well, I guess top of it all is are the Europeans. But to what extent is there any success in this area if we look at, well, for example, the Korean case study?
Right. I think we've all seen the ice raids on the Hyundai factory, right? That was quite it's a mixture of absurdity, humiliation as well. And just when it comes to companies building things in the US, there's now like a 3-month delay, if I'm not wrong, for the battery plant to become operational as well. So right now there's a lot of negatives when it comes to moving your operations to the US, right? You have to pay higher labor costs, there's a supply chain issue, and now you have potential raids on your factories and a lot of delays. So I think US allies, they are really trapped in a very, very bad place. They know that Trump, well, he's going to last for the next 3.5 years, and who knows who his successor will be. It could be President Vance for the next 8 years after that. Who knows? So this entire game can continue indefinitely. So I believe a lot of countries today, they are trying to have a dual economic policy, right? They have to, I guess, sacrifice part of their economy, part of their GDP in order to appease the United States. But I think it's also worth it to really look behind the scenes. What are they really doing? Are they working closer with each other? Are they expanding ties with Europe? Are they expanding ties with Southeast Asia? And I think it really pays to see how are they slowly, subtly working behind the scenes with China. Because as you put it, it's not really sustainable for all these allies to shift everything to the United States because economic policy and foreign policy there is going to be extremely volatile. You don't know what's going to happen next. We could always come to a point where the industries of Japan, the industries of Korea could actually be hollowed out. Everything moves to the US, and how are you going to reclaim it back then? And if US somehow they raises the taxes on all these corporations, now it's a windfall for the administration of that day, but it's going to be a very big loss for you, and there's nothing you can do. You have tens of billions of dollars trapped over there. So I think US allies, especially the ones in Asia, I think they are facing the biggest squeeze, the biggest sandwich of all time.
Yeah, this is the problem though, because once they set up camp in the United States, then they can be taxed. Their workers could be stripped of key visas, and the whole. I mean, if the objective is to just set them up in the US and then gradually absorb them into the US to be American owned and American workers, it would be a very temporary benefit, I guess. I did want to ask you about the financial war as well, because we see not just the Bank of China beginning to reduce its exposure to US national debt, but also the Chinese tech giants seem to be moving away from the US dollar to finance their operations. What is actually happening? Is this a new development, or is it intensifying? Or how can you, I guess, make sense of what is happening?
Sure. All right. So the idea of financing your company when it comes to emerging economies, China, Brazil, or countries out there, the old playbook was to raise money in US dollars for two key reasons, actually. Now, the first is because the dollar today is still the reserve currency. You can go around the world, you can use it to buy supplies from any country out there. But because of the recent actions of the Trump administration, especially when it comes to the tariff war, we all understand by now the dollar is going to get debased. The strength of the currency is down, and is down by anywhere from 9 to 12% today. And that's a lot of value being lost. Now, you just imagine if you're a company and you want to borrow money, the most important thing you want to ensure is that you keep your borrowing costs as low as possible, because you don't want to pay a lot of interest, right? It's just like buying a mortgage. Why would you pay 5% for a mortgage when you can get it at 2%? It doesn't make sense. You rather go for the one at 2%. And secondly is the strength and the stability of the currency. So let's say you own a company and you borrow 100 million. Does it really make sense for you to do so if within the next half a year or 1 year your purchasing power has now effectively dropped to 90 million? So not only are you paying interest on the debt, you are actually acquiring a weaker currency. And this is a very big problem, right? And if we look at US borrowing costs right now, even though the Federal Reserve, which is the US central bank, they're trying to slash interest rates down. If we look on the longer end of the curve, we are talking about 5, 10, 30-year bond yields, they are still remaining quite elevated. A lot of them are still above 4%. However, when you look at countries like China, their borrowing cost is like 1.8 to 2%. So there's what you call half the cost of carry, or that simply means your borrowing cost is 50% debt in China compared to the US. And because of this, a lot of companies, a lot of countries themselves, they look at this situation and say, all right, this trade war is going to continue for at least the next 3 to 4 years. The Federal Reserve is going to continue slashing rates. If we look at what's going on, Trump is planting his henchmen into the Federal Reserve Governor Board as well. Someone called Stephen Miran, who really loves weaker dollar policy. And you see all these negatives coming on for the dollar strength. So the currency is being hammered. And on the other hand, you have a dilemma in interest rates. The US still can't stop spending. Despite getting like $86 billion worth of tariff revenue, the deficit is going to clearly cross 2 trillion this year. So bond yields can't possibly come down. That's why countries, they are now borrowing in alternative loan vehicles. And in China's case, they are just borrowing their own currency, which makes sense.
On that topic, though, how do you see besides the future well, deficits of the United States increasing. Is there any efforts to get the debt under control? And well, what does this mean? Well, are countries shifting towards gold? Are they trading more in their own currency? I mean, how can China as well as other great powers or large powers, at least around the world, respond to this? Because when you have the reserve currency of the world, the US dollar, declining in this way in terms of its reliability, it's being weaponized, it's overextended in terms of debt. There's no indication that this can be brought back under control. And as you said, the US, even though it gets tariff money in from its importers, it's still continues to splurge in a big way, which is, I guess, is why Musk left the team. Well,
Right.
partly why.
Yeah. So I guess when it comes to alternative currencies, alternative assets versus the US, we are beginning to see two clear trends, right? When it comes to trade and finance, we are seeing more and more countries use their own local currencies, bilateral trade. In BRICS, it mainly just differs to the rupee, the ruble, and the Chinese yuan, right? These three countries trade amongst themselves and they try to bypass the dollar uh, because there really isn't much of a need right now, especially India after the recent incidents that really just pissed the country off. And when we look at other countries as well, we can see currencies like the euro continuing to go up, a lot of demand being poured into EU bonds because compared to the US dollar, it's the lesser of two evils. So this is one uh, how countries are actually beginning to function in bilateral trade today. Now, when it comes to reserve assets like gold, assets where people actually put their money to store value, we are seeing a lot of demand actually entering the bullion as well. If I'm not wrong, just 2 days or maybe a week ago, we reached a new high of $3,700 gold, which is unprecedented. We have gone past the previous inflation adjusted high. And that really indicates that, the purchasing power of the dollar is actually dying in a very accelerated rate. Because, an ounce of gold, a block of gold, nothing really changes about it, right? It's just a lump of yellow metal, which is precious. But the problem is the currency where it's being denominated in, which is mainly dollars, is being debased. So a lot of countries, they now face this big dilemma. They either want to hold the currency or the assets of a country where, the economy is truly expanding and where there's really safety going on, which is not really very stable, right? A lot of money has really flown into the Chinese market. For example, we are seeing their equities rise by 30 to 40%, which I believe is a genuine bull market. But things can really go haywire between Trump and President Xi, and then everything could collapse in both markets at the same time. So we are seeing a lot of money being flowed into alternative assets, right? And the only avenue, one of the few avenues left is gold.
Well, my last question, though, because you did mention the Europeans before. Yes, my last question is about Europe, because we now get the news reports that the Europeans are considering more sanctions on China. There's actually an interesting political article here. Yeah, this title is amazing to me. Yeah, this quote: EU plans more sanctions on China. Will that be enough for Trump? I mean, it spells the whole thing out
Right.
because, well, it's not a big secret that the Europeans seem to be aware that it would be a disaster to put economic sanctions on Russia. Obviously, sorry, on China. Obviously, it has two main problems. One, they would reduce the prosperity for the Europeans, but also it by severing ties with this economic powerhouse, they would make themselves even more dependent on the United States, which is a bit of a gamble because it seems that they're hoping this will buy them the love of Washington, and they will then be rewarded with favorable trade agreements. The alternative path is that now the only game in town is the United States. They depend completely on the US, which, and this at a time when the US is in deep economic trouble and they can now begin to extract a lot of concessions. So So this could backfire, I guess, if the Americans decide that now it's time to plunder Europe to
Right.
keep at least the U.S. ship above water. Uh, but in terms of the relations between the Europeans then and China, what will be the significance of this? Uh, Not just on these sanctions, but I'm guessing that the Chinese will not just sit idly by and not retaliate in any way, as this could set a bad precedent. So, what do you think is going to happen if the Europeans decide to continue down this path?
Well, firstly, let's talk about the American perspective first, right? Now, I believe that this is a very interesting and quite a smart gamble by Trump to really hollow out Europe once and for all, right? I mean, if there's a better strategy, a better gambit than this, I don't think I can see anything else. Maybe this is one of the last few moments of brilliance from this administration, trying to force Europe to break ranks. Russia has already broken ranks with them long time ago, and now they're trying to break ranks with China. And if that really happens, you can just imagine Europe suffering throughout, everything from inflation to their manufacturing sector will collapse. Now, one reason why Europe is still able to manufacture stuff today and still sell it around the world is because a lot of their inputs are coming from China. Now, after the tariff war was enacted, Europe right now is suffering 20% of tariff selling to the US, which means they need to bring down their cost of production in a way in order to satisfy the American customers. Now we know at least on the energy side, you can't really bring down anything else already, right? You've cut off Russia and you are pledging to buy $750 billion of expensive US energy. And that means US LNG. So your energy part of the equation is essentially screwed. Now, the only thing that you can control right now is the other inputs, whether that be electronics, whether that be rare earths, or whether that's something as simple as plastics. Now, you don't have any mines left in Africa or the rest of Central Asia. All those are either under Chinese control, Chinese influence, or Russian influence or BRICS. All their footprint is all over there. So by severing ties with China, Europe is going to lose all their cheap inputs, and they're not going to buy affordable solar panels as well. They're not going to get affordable cars. They're not able to really revive their manufacturing. So, in my opinion, is China really going to punish them, kick them when they're down? I don't think so, because Europe will be locked in their own economic hell, and I don't think any country can actually make it any worse. Because once that happens, China, well, they might close off their markets to, EU goods, EU companies, and because of that, where else can they go? As you mentioned before, if you sign the Faustian Pact, the only market left is essentially hell. You have to export all the way to the United States. And when that happens, right, Trump now has a lot of leverage. So even if you punish China and Trump promises to bring the tariff rate down to 10%, is there any guarantee in the world that the tariffs won't revert back to 20% or revert back to 25%? Because if I were Trump, I can always make the argument that now that Europe is not able to export to other markets, including China or the rest of Asia, because it is so-called uncompetitive for them to do so, as Trump, I can always say Europe now has overcapacity and they are flooding American markets. They are taking away our own local American market share. It's time to ring fence ourselves from this uh, European horde of exports, and we need to raise the tariff to them. And this is a very big danger that I think the European leaders, von der Leyen, Commission, whatever, Brussels, I don't think they're really factoring this in right now.
I guess punishing the Europeans is redundant when they're doing this to themselves.
Okay.
And well, you can always say the world is bigger. They can always go shift a bit towards India, but they're putting pressure on India too. So there is this efforts now, it seems, to sever the Europeans from all centers of power. And again, the whole gamble is based on the idea that Trump will reward loyalty, not exploit it. I think this is going to be a very poor gamble indeed. So before we log off, where can people find you?
Sure, you can just find me on YouTube. We talk a lot about economics, a bit of geopolitics, gold, finance, investing as well. Just go YouTube, type in Sean Fu, SENFOO, and you'll be able to find me. YouTube.com/Sean Fu Gold. Yeah.
Okay, excellent. Well, thank you so much, Sean. It's always fascinating to speak with you. So thanks.
All right. No problem. Thank you.